Moving on towards the next speaker. Our next speaker is Dr. Omar Fisher, co-founder of iwealth.org and an expert presenter of First Islamic Banking and Takaful in Beijing, China 2016. He is also a Takaful expert and MD of Khidr Solutions in Dubai since 2011. He was on advisory assignment for 20 months, assisting CEO of ICD, a private sector arm of Islamic Development Bank in Jeddah. He also led innovative teams for Islamic guarantees, insurance revitalization, SME bank proposals, blockchain and digitization of assets, and relaunching of the new product committee. Dr. Umar is also the founder of ICD FinLet initiative that piloted FinLet webinars to Saudi youth in October 2020. He also had a prior engagement with Telco.sol, a Swiss Dubai seasoned group with extensive network in Middle East, GCC and Africa. With a focus in energy efficiency finance, affordable housing with off-grid solar power packs and renewable energies. He also initiated customized FinLit coaching programs since November 2020. Dr. Umar's topic for JatBit Conference 2020 is Dynamics of Islamic Finance and Cryptocurrency. Joining us live from UAE, we welcome Dr. Omar Fisher for JatBit Conference 2020.
So good morning. This is Dr. Omar Fisher in Dubai, and I'm delighted to be invited to share with you some thoughts on the dynamics of Islamic finance and cryptocurrency. Allow me to share my screen. So we'll take a few minutes this morning together, and we'll first have a reminder on the purposes of money. We'll look at the growth of money globally, basic trends of fintech, conventional versus Islamic values, what is the universe of digital coins, and the future of Islamic fintech, and finally look at some trends specific to cryptocurrency and ways to pay. The three main purposes of money: medium of exchange, mostly in commerce and trading, saving and investing, but not as a storehouse of value historically. It's a facilitator. It addresses both short-term and long-term goals. It enables you to help others with a portable resource, and of course, it's a measurement tool. And money, in addition, can be a mirror. It shows you your personal values, how you're using the resource of money. And it can make visible to you and others what are your money habits. Now, the history of money, of course, started many centuries ago with gems and stones, metal coins, which were stamped and later replaced by something which was lighter, easier to carry, which is paper, which we call fiat money, usually at that time backed by gold. Then about 1913, shortly around the time of the First World War, the United States Treasury formed the Federal Reserve, which is a private group of banks in the United States. And then when the Depression came in the 1930s in the United States, they shifted away from the gold standard to what they called a Federal Reserve note, backed only by the full credit of the US Fed. And after World War II in the 1940s, the US dollar was accepted as a general global reserve currency because of the nature of the Marshall Plan, where the US was helping to rebuild the devastated economies in Japan and Europe. And then by 1972, the gold standard was completely removed by the Federal Reserve. which meant, of course, that the central government could print currency in an unlimited fashion. And that's what happened. If we look at the amount of money in circulation in 1933, it was $8 billion. And then by 1990, it shot up to over $2 trillion, zoomed to 5 times that by 2010, at the time of the Great Recession. And most recently, it has surpassed another 18 to 20 trillion dollars of paper currency circulating the globe. Keep in mind that there are other forms and valuation of money called derivatives. And these today equal over $700 trillion worldwide, or more than 9 times the sum of global GDP. So ask yourself, what is the true value of the paper money, which is in your pocket, or the digital money, which shows up in your phone? We should also ask ourselves, what do fintech investors seek when they look to support businesses? Well, it hasn't changed much. They look at supply and demand for the particular product or technology that you're bringing forward. They look for competent management, which includes a good corporate governance. They look for fair and adequate capital structures, a clear path to market, as well as what's the exit strategy and the time horizon in order to have a return to their capital, and what is the desirable hurdle rate, which is generally the cost basis, and then compare that to the likely resale value. They also, of course, look at the innovative or disruptive technology edge. What is missing these days is a positive cash flow, which may in fact be helpful to startups in the fintech space. Now, the basics of fintech go to a definition, which is helping businesses, companies, consumers automate and better manage their money, as well as the financial operations and the processes by utilizing specialized software and algorithms. Fintech is a combination of finance and technology, and of course is applied on the digital devices of computers, tablets, and smartphones. Now, this has driven changes to how we understand money. And I would point out that there are 5 trends today. One is the death of cash, that is the fiat money we talked about a moment ago. There is open source APIs for banks, which is really opening the door wide for fintechs and other third parties to involve themselves now in the financial landscape. Of course, there are multiple currencies, and many of these are decentralized. Money is becoming, in some senses, programmable and very similar to loyalty points. And in that way, money is becoming equal to data and information. Of course, fintech is equivalent to disruption in most people's minds. And there are 4 main sectors to focus on: access to capital, giving investment advice like robo-advisory, working on automating and making digital identities and KYC easier for the financial industry, and of course, payments, bills, and remittances. And you can see here the various applications as applies to people, businesses, risk and credit, and of course, cryptocurrencies, including tokens and the exchanges of the cryptocurrencies. Now, between the Islamic and conventional values, one takes note that an Islamic fintech must also pay attention in each of these segments to certain rules and, we would say, limitations on the sources and uses of money, on the sources and structure of the business, on the type of risks and methods of risk sharing. No change with regard to identity, and of course, in the cryptocurrency area, paying attention to asset-backed currencies. So the scope of cryptocurrencies today or digital coins, typically is secured, as you know, through cryptography, and it relies on blockchain technology. One key aspect, of course, is the distributed ledger of all transactions, which is decentralized and therefore secure across the entire network, so long as no more than 50% of the computers participating can gang up, let's say, together to make a particular change. Now, unlike the conventional fiat currencies we're used to, which are issued and regulated by central banks and governments, digital coins are issued by private entities. And the process is called mining, which is mathematical calculations done by computers to solve equations and hence unlock a supply of new coins. Presently, there are more than 1,800 cryptocurrencies issued since the onset in 2009, but it's important to point out that more than 500 have failed, gone bankrupt, been hacked, or some way disappeared. So a transaction of agreed value is recorded in the ledger of accounts between peers using the data processing system of verification and encryption. Where does the value come from? Well, limited supply, the demand for it, the use or utility function within the marketplace that accepts the coin in exchange, and because there is some work done, mining, which involves a lot of electricity power. Now, as you know, Islamic values prohibit speculation. Hence, cryptos that are not asset-backed are somewhat questionable as a permissible investment. We know there are hundreds today of different digital coins, the largest segment of which, of course, is dominated by Bitcoin, but there is Ethereum, there is Ripple, and many, many more, as the chart here indicates, and this is an expanding universe. Let's focus a moment on Bitcoin marketplace since it's the largest. As of November 2020, the value of the coin has come up substantially since March and is today at 15,500 per coin, meaning all the Bitcoins in the world are roughly $260 billion. However, Bitcoin's worth then is less than 2% of the world's gold supply. And in comparison, as Forbes indicates, the net worth of the 11% that founder Jeff Bezos owns of Amazon is equivalent to 331 billion. The Money Project attempted a computation in 2017 of all of the money in the world. They call the narrow money supply. It's about $37 trillion, which means as of this month, that makes Bitcoin about 0.7% of the narrow money supply, and all the Bitcoins in the world are still left less than 1% of narrow money valuation. So that means there is substantial upside and growth potential in the cryptocurrency market. However, one must also be cautious because, as you can see from this chart, the high over 3 years ago for Bitcoin was then subsequently, and that was a rise of about 300% over the previous several years in valuation. And yet the capitalization promptly was reduced by over 50% in the next 2 years. It has recovered slightly, but therefore the main takeaway with regard to cryptocurrencies generally as a form of investment is they're highly volatile. It's certainly a speculative asset class. It has no intrinsic value. It's invisible, unregulated, and fully depends still upon the trust between individuals. Now, a survey of commercial banks was forecasting through 2022 that financial reengineering would occur mostly in, as you see from this chart, in 4 areas. One of them, cryptocurrency, will take up about 15% of all of the financial institutions' attention. Artificial intelligence, about 1/3, blockchain, 2/3 will be getting involved in that, and data analytics is again about 75%, 3/4 of the group. With regard to Islamic assets, the totality of all of Islamic assets under management is roughly about $4 trillion. Now, this compares globally to commercial banks' assets under management of 56 to 100 trillion. So it's still 4 or 5% of the global market. However, it is expanding in more than 54 countries across the globe, and therefore Islamic fintechs may want to put a focus on this particular segment. And what might be the opportunities? Well, it's on the supply side, focus on geographic concentration. We could ask a question, are there any regional players in the fintech space? And the answer is no, not yet. Are there any global players? And the answer is no, not yet. As compared to Robinhood, Acorn, Ant out of China, Square, Plaid, PayPal, Kickstarter, many of these are probably known to you, and Mint, for example, LendingTree. So this gives you maybe some indication about the opportunities that are emerging in the Islamic fintech space. And here is a chart showing you, as of 2020, that there are hundreds of fintechs coming up to address the needs of consumers and financial institutions alike. The CB Insight report focuses very clearly on this array of opportunities from mortgage and real estate, money transfers, wealth management, capital markets access, insurance, payments, personal finance, regtech, blockchain, and lending. So you might put your focus into these particular segments. And in the payment space, in conclusion, we can see that there is a huge explosion of different ways to pay and invest. Cash, checks, credit cards, debit cards, prepaid cards, contactless, phone transfer, ACH push, wire transfers, Western Union and payment out of India, remittances, and of course, coming on rapidly, cryptocurrencies and tokens, all pointing toward the future of payments. For that, I want to thank you for your attention, and we look forward to having questions from the audience, and I remain at your disposal. And I want to again thank the organizers for allowing this opportunity to present on the dynamics of Islamic finance, fintech, and cryptocurrencies. Thank you very much.